Are red cars more expensive to insure than any other type of car? We're going to answer that question and bust a couple of non life insurance myths that have been going around today. What's up? You're watching Tito Talks non life insurance discussions once again with your favorite Tito Miguel, who loves to make non life insurance discussions easier to understand for both agents and clients. Magandang Friday po sa inyong lahat. Let's not waste this wonderful opportunity right before the first weekend of the year starts. I know you've been looking forward to it, as am I know it's been a really rough week trying to transition from a vacation mode back into work mode. And now another sweet weekend comes along this way. But before we get into that weekend, we are going to talk about a few myths that most people usually have concerning non-life insurance. Now, if you do a quick search about usual myths for insurance, most of the things that are going to pop up are related to life insurance. Why is it expensive? Is it more expensive to get life insurance if you're a smoker, a previous smoker? What if you don't exercise? That sort of thing. But for today, we're gonna peel away from that trend, and this time we're gonna talk about usual myths that you may have, or you and your relatives, families, loved ones, colleagues may have about non-life insurance that are probably stopping you from considering getting coverage. And let's start with the first one then, shall we? We get this one a lot, especially for those of you who insure vehicles. Are red vehicles more expensive to insure than any other vehicle in any other color? Well, I'm glad to say that that is most certainly not the case. The color of the vehicle doesn't exactly affect the amount of premiums that we charge you, unless it's a really expensive color that actually increases the value of the vehicle, or rather if you're changing the color of your vehicle. Whether it's a red car or a black car or a blue car, your premiums are going to stay the same as long as you're still talking about the same car. Of course, a red hatchback is going to be more affordable to insure compared to a red SUV or a red AUV for that matter. So of course, it's not just the color that we're talking about. Other factors affect the premium, but color is most certainly not one of them. For further information, you can check out this video that we made a couple of months before about the various things that could actually affect your motor car premium. And on that same note, it's not just red cars. Red houses, red offices, red clothes. Even if you wear red clothes, even if your house is a red gate, even if your office has a lot of red on them, just because it's more prone to damage, just because it absorbs more heat, or there are certain rumors going about that it is more prone to accidents compared to other objects of different colors, you don't have to worry. So if you really like that red car and you don't want to pay more for insurance, go on right ahead. If you want to paint your house red, feel free to do so. It's not going to affect your premiums. On that same note, there are a lot of people who are under the assumption that once you start insuring your asset with an insurance company, your premiums are going to jack up every year regardless of what you do. And this is a really big myth, although there are some very special considerations to take into account. Number one, it is possible for your premiums to go up on a yearly basis, but that only happens in certain situations, like wherein you upgrade the asset that you're trying to insure. Let's say you started off with a car that costs about half a million pesos. Then by the end of the year, you upgraded the engine, you added a new sound system, you changed the paint job, you changed your rims, your mags, and all of these altercations or modifications to the vehicle will of course affect the value of the vehicle, meaning it would cost more to insure the said vehicle. Not because it's the rules, but because of all the modifications you've done on it. You've increased the value of the vehicle via your modifications, and because the vehicle is more valuable now, thanks to your modifications, covering the vehicle and the modifications will of course take more money. However, on the other hand, if you leave your car alone, and keep it as it is throughout the whole year, by virtue of depreciation, your car's value is going to go down by a certain amount by the end of that year. Meaning, come your renewal period, it's going to cost less. Your car is going to be less valuable, meaning it's also going to cost less to insure the said vehicle. And it's not just for your cars. The same can also be said for your houses. If you leave your house the same way it was, you don't make any modifications or upgrades that will affect the value of the property, naturally the value is going to decline by virtue of depreciation. Again, meaning instead of expecting higher premiums, if you maintain the status quo and don't modify your assets, you're going to be expecting less premiums on a regular basis. But that's not the only factor. You also have to consider claims history. So if you are a customer that makes a lot of claims during the full year, naku po, that may affect your relationship with the insurance provider. Depending on how the insurance provider assesses or interprets your behavior, you could either be looking at higher premiums so that the insurance company can still cover you and the losses that you incur, or they could choose not to renew your policy anymore because you're too big of a liability. So please, even though you're insured, it's always still important to act as if you are not. This one we get quite frequently, especially from frustrated customers most of the time. You're all offering the same product. I looked at your policies. You have the same coverage for CTPL. You have the same coverage for own damage and theft. You have the same coverage for fire insurance, for earthquake coverage. And you're not wrong. Yes, this is because the insurance commission here in the Philippines regulates what kinds of things we can put in the policies that we sell. We can't just make up anything we want in our heads and offer it to the market as if nothing's changed. When we come up with a product or when we come up with certain coverages, these products, these ideas, and these services, they all go through the inspection and require the approval of the insurance commission in the Philippines. And this regulatory body mandates certain levels of coverage that all insurance companies have to be able to provide. Meaning, each and every one of us competitors in the market should be able to provide a bare minimum. And that bare minimum is what probably most people notice when they take a look at policies, which of course leads them to say that we all offer the same product. And in a way, that's half true. Although the coverages are the same, the delivery of these services and the keeping of these promises will differ from company to company. Different managements or different owners have different styles of managing their funds, of organizing their people, of organizing their claims processing guidelines, of executing claims, of executing sales, of taking care of their customers after they buy their insurances. So to say that all the products are the same is actually fair, but different companies have different ways of taking care of their clients. Some companies can process claims faster than others. Some companies can afford larger coverages for certain customers. Some companies even and you can quote me on this. Some companies are even known to really bend over backwards for their customers, providing them extra benefits and services like roadside assistance, being able to have your vehicle towed by the insurance company at no extra charge, even providing free on-site repair services, flat tire replacements, key replacements, fuel delivery, you name it. So although most companies will have a certain line of commonality with their competitors, it's not the same in the way that they deliver their promises. So always keep that in mind. You always want to choose an insurance provider that always keeps its promises and keeps its clients in the know. This one, I have to admit, has caused a little bit of confusion with a lot of customers, especially first time customers. When most people hear the word comprehensive, they start to think that everything is already covered since they paid the best money for the best product that the insurance company can offer. Now, this is not true. And the fact of, or the idea of total coverage covering everything, it actually doesn't exist. And I hate to break that bubble to you. But the concept of having everything possible, everything imaginable covered does not exist. Even in all risk policies, which I'm linking up right here, even all risk policies have their own caveats. By that, I mean that they have exclusions as well. So even if you have an all risk policy, you still have limitations to that because that idea does not exist in insurance. So why do you call them comprehensive policies in the first place? That's a fair point, Miguel. When you take a look at the dictionary, the term comprehensive says complete, including everything that is necessary. So when you're talking about a comprehensive insurance, what you're referring to actually, or what you mean, is that a comprehensive product is the best product that the company can offer. All the bells and whistles, all the additional promos, all possible coverages, all possible sub coverages, all possible extensions of cover have been included in that package. So, in short, it's the best product that the company can offer you as a consumer, but that does not exactly mean that it's maximum coverage, that everything is covered. No, there's no such thing. Now, this bonus one, and as promised, yes, your bonus content for today. Insurance, whether it's life or non life insurance, is only meant for breadwinners. It's only meant for businessmen. It's only meant for people with money. And to that, I say that is completely outside logic, or it's not completely true. Let's say you bought yourself a house or you bought yourself a car. Even if you're not the main provider of your family and you bought this as a personal purchase, you still have the right to insure the vehicle. Meaning, whatever it is that you own, whatever it is that you have, whatever it is that you've worked hard for, you have the right to insure, you have the privilege to insure, and you have the capacity to insure. Because if something happens to these objects, your car, your house, yourself, the insurance company is going to be able to help you recover from your losses. Replacing your car, repairing your house, paying for hospital bills. Insurance is not meant for a specific group of people. Rather, it is meant for people with something to protect. And as agents, I want you to be able to get rid of that notion with your clients. Insurance is not for rich people. Insurance is not for breadwinners. Insurance is not for business people. Insurance is for everyone that wants to protect their assets. Not just their assets, but also their loved ones as well. And I hope you enjoyed this lesson as much as I enjoyed giving it to you guys today. If you find this type of content useful, please consider subscribing and liking this video. Help us grow and reach more individuals interested in insurance. So once again, thank you so much for your time. This is your favorite Tito Miguel, always saying, I hope you enjoy the rest of your day.